Ladies and gentlemen, welcome back to the channel. It is one of those days yet again where it's a very uneven market. Mag 7 is leading this thing while everything else is faltering. And I think there's a reason for that. And I think, long story short, it's the government shutdown. The markets are sending a clear signal to the government that they are unhappy with the current state of politics in this country, that they want their BLS data and they want to get the government reopened. So we'll talk about that in today's episode. We're going to be going over all of your breaking news, take a look at sentiment indicators and metrics in this market, and discuss what could be coming next. As always, hit the like button, subscribe to the channel if you have not done so already, and check that link out down below in the description of today's episode if you guys would like to come join us in the trading community, where we are going out finding those undervalued, these overlooked AI stocks. And well, not always just AI stocks. I actually bought a new stock today, bought 1,000 shares of a $6.50 company that has 10x potential, that is not related to AI at all. It's actually in the food industry, which never thought I would be investing in one of those companies during an AI revolution. But when there's opportunity, there's opportunity. So check that out if you guys would like to. Link down below in the description of today's episode. But with that said, let's get started with your broader market news today and what is happening. Why are small caps selling off yet again today? And some areas of this market are doing quite well. Now, if we take a look at the broader markets today, it's really a mixed bag across the board as far as an index level. The Dow Jones Industrial Average is down 0.4%. S&P 500 is up 0.33%. NASDAQ is up 0.71%. Russell 2000 is down 0.68%. So this is, again, another top-heavy market where Wall Street, they're comfortable buying the Mag 7 stocks. They're comfortable buying the big dogs. They're a lot less comfortable buying the smaller cap names. Microsoft's basically flat today. Apple's down 0.5%. Google's up 1/3%. Tesla's up 2.5%. Amazon up almost 5% today. What about Nvidia? You know, a fan favorite of some. Nvidia, man, this thing hates me. Nvidia up almost 4% today. Okay, so this is really a top-heavy market. And again, if you look at the S&P is up 1/3% today. The equal weight S&P is down 0.41% today. So that just shows you, again, how top heavy of a day like today actually is. Something we've also been monitoring quite a bit is the S&P equal weight volatility. So this is the VIX EQ. It's still sitting at 40, which over the past year, the high was 70 and the low was about 31. So you recently hit a high of almost 45. So you've come down a little bit, but volatility in single stocks is still pretty extreme, which, again, as that volatility comes down to more of a normal level, you're likely to see stocks actually do quite well. But honestly, in my personal opinion, I think Wall Street right now is kind of trying to pressure the government to reopen. I think Wall Street really does not like the government being shut down at this point, and they're voting with their money. Okay, you see this happen in bond markets a lot, right? They're called bond vigilantes. Now, I can make a 20-minute long video on the history of bond vigilantes, who coined it, and why it's considered a thing. But long story short is, investors, if they don't like certain things, they will just sell stocks to incite change, right? It's like nothing is better at changing a situation than putting some money on it, right? Talk is cheap, but, you know, when you start to see your stocks perform poorly, or bonds, as the case of bond vigilantes, but they're stock vigilantes, that's a good way to incite change. Okay, so I think there's a little bit of that going on right now. Wall Street is just throwing a little bit of a tantrum over the government still being shut down. I understand why, from an institutional perspective, they consider the BLS data like gold. I consider it like silver at best. Okay, I don't think BLS data is very good at all. I think company earnings are a much better way of evaluating the economy and, how things are out there. And what we've heard from earnings is things are really good. I mean, it could be better. Some areas are not as good. Okay, there's still that discrepancy between value-oriented companies are doing better than premium-oriented companies. But on aggregate, companies are beating. They're raising forecast. Credit card companies, banks, loan providers, they're all saying the economy's pretty much unchanged. It's been not great on the low side of the consumer and really good on the high side of the consumer. That is still happening. Nothing has changed. But Wall Street, they're a little nervous because they view BLS data as critical for their decision-making abilities. And I think people are just really upset at the government still being shut down. So once that clears, once we get the government that reopens again, I believe you're in for some pretty significant upside in this market. I mean, let's be honest. The Fed last week was bullish. Trump lowering tariffs on China was bullish. The Nasdaq was down 1.5% after that happened. That just shows you how irrational this market is right now. And we've had Mag 7 that all beat on earnings and raised AI CapEx budgets. Okay, the last thing I think we really want is the government reopening. That could happen tomorrow. Okay, there's a lot of speculation that the government will reopen either Wednesday or Thursday. Well, so technically not tomorrow, but on Wednesday. We do have some earnings today in after hours as well to be on the lookout for. Palantir, one of the biggest ones, reporting this week. Hims and Hers, Novitas, Goodyear, Fabrinet, Clorox, Sarepta, and Realty Income, as well as Diamondback Energy report today in after hours. Tomorrow, pre-market, Uber, Shopify, Spotify, Pfizer, BP, Ferrari, Norwegian Cruise Line, and Hut 8. And then tomorrow, you have AMD, Arista, Supermicro, Beyond Meat, Marathon, Kinross, Upstart, Axon, and Pinterest. And then later on throughout the week, you have other big names like ARM and AppLovin and Robinhood and McDonald's, Recursion, DraftKings, The Trade Desk. So, we still have a lot of earnings coming out. Just the big ones that move the headline S&P have all come out, and they've all been better than expected, which, there's likely nothing to fear in earnings beyond Mag 7 either. We did have some Fed comments today, so I will read you some of the more important ones. Fed Daily says it would be unfortunate to get inflation to 2% at the cost of millions of jobs. So that actually sounds kind of dovish towards cutting rates. Fed Daily says that labor market slack is rising. Fed Daily says there's more vulnerabilities now in spending data given the softening of the labor market. Fed Daily says if you wait for the job market report to tell you if the labor market is weak, you're already behind. Now, the U.S. government will use $4.65 billion in emergency funds to pay partial November SNAP benefits during the government shutdown, covering part of the usual $8 billion monthly for 42 million people. Officials warn some states could face weeks-long delays in distributing payments. GoFundMe CEO has said the economy is so bad that more of his customers are crowdfunding just to pay for their groceries, per Fortune. Again, this is what's been happening, okay? Some of this parts of this economy and consumers, lower income guys, are really struggling. Higher income individuals are doing really well. It's been this way for a long time, but I think the more or longer the government is shut down, the more people are getting nervous about what kind of damage this could be doing to the economy. And that's specifically why you're seeing a lot of the small cap areas just getting absolutely decimated. Today is another decimation in the small caps. And that's because if you're a fund manager and you have to stay invested in this market, if there is concerns about the economy, you're going to sell small caps and you're going to go long in the Mag 7 names that are more predictable, that are, larger companies, essentially too big to fail. Like, that's where you would want to allocate your money if you had to be invested. And that's what you're seeing right now. Fed Daily says we have less information than we used to, but we can still make a decision as needed. Daily says she is open-minded on December rate cuts, says that 50 basis points of cuts this year makes the Fed better positioned, and she says we need to take or make decisions that balance risks. U.S. House Speaker Johnson says we're mindful that time is running out on the stopgap bill. And Johnson says he's praying that elections change the stopgap talks this week. Fed Goolsbee says he is cautious about layoff data. Goolsbee says the hiring rate is low, one of the economy's weakest factors, and Goolsbee says it's unusual to have low hiring and low firing in the economy. Fed Goolsbee said earlier this morning that he has not decided for what happens at the next Fed meeting. The threshold for cutting rates is higher than the last two Fed meetings. Fed Goolsbee says that he is uneasy with front-loading rate cuts. The S&P Global Manufacturing PMI's final numbers for October came in today at 52.5, coming in higher than last month's 52.0, beating estimates of 52.2. Now, ISM Manufacturing PMIs came in at 48.7, the estimate's 49.5. Manufacturing employment came in at 46.0, beating last month and beating estimates of 45.4. ISM Manufacturing new orders came in at 49.4, beating estimates of 49.2 and coming in higher than last month. And manufacturing prices came in at 58.0. Missing expectations of 61.7 and coming in lower than last month at 61.9. So this is actually much better than expected, numbers. Now, we do have some more data throughout the week. We are going to get these services PMIs numbers on Wednesday, which is going to be much more important since manufacturing is only about 20% of the economy. Services is about 80%. But again, overall, I think the markets are just trying to pressure the government to reopen. That is the last big obstacle in this market. We got the Fed. The Fed was bullish. Okay, they ended QT. They started a low-grade QE. They cut rates again. Sure, they're data dependent, but we already knew that. Okay, not a big shocker. Overall, the Fed was net positive. Trump lowered tariffs on China 10%, and stocks have not reacted positively to that news at all. Last time I checked, that is good. That is good for inflation, and that is good for economic activity. That is good for company margins, okay? All around, that's good news. We haven't reacted positively to that. Because the government is shut down, there's a data blackout, and Wall Street is getting more nervous by the day. Let's just say it for what it is. There's nothing wrong with the stocks that you may be investing in. It's not a single stock problem. This is a broader market problem. Okay, and then last but not least, earnings are coming in really good. AI is alive and well. Companies are beating and raising. Like that is still the environment that we're in. Just we still have this government shutdown with an economic blackout, and Wall Street doesn't like it. Okay, that's the fact of the matter. Now, good news is maybe the government will reopen on Wednesday or Thursday. While that's uncertain, that is the kind of the rumor out there. So we'll have to see if that happens, when it happens. If it doesn't happen, then we're kind of still in the same boat, and it's going to be hard for stocks to do well. Like, Trump lowered tariffs on China 10%, and the NASDAQ sold off 1.5% the next day. Like, Wall Street doesn't care about tariffs right now. They want the government opened. And until we get the government open, it's kind of hard to see anything else being good if lower tariffs on China was not good. Now, CNN Fear and Greed Index today is coming in neutral at 45. Market momentum is greed. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, fear. Market volatility is neutral. Safe haven demand is fear. And junk bond demand in extreme greed. The AI investor sentiment survey is Well, it came out on last Thursday, and it came in 44% bullish, 19.1% neutral, and 36.9% bearish. So, yeah, just again, things don't look great, okay, from a sentiment perspective. And again, if you're a big money investor, you're going to want to stick with large companies, the large caps, and you're going to want to get rid of the small caps or the riskier stocks. And you even see that reflected here in the percent of stocks trading above their 50-day moving average, now at 38.5%. You're down 7.1% today. It's a bloodbath under the surface of this market. If you look at the headline S&P, though, you wouldn't think anything was wrong. Okay? But it's really not a great day. So that's what is happening. That's why stocks are essentially crashing yet again today. And we'll see when things get better. Whenever, politics wants to stop politicking and we can get to actually solving problems, which hopefully is sooner rather than later. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you'd like to come join the trading community. But with that said, have a great rest of your day, and I will see you in the next one.